Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. To all of you out there, once again, best wishes to you, your family for health, wealth, prosperity, Ganesh Chaturthi, of course, and of course, the festival continues. Mood of festivities out there on the street. Here, of course, as we begin this session, there is that tariff bit, an obstacle which I hope gets dealt with sooner than later, but you've got to go through the pain. I think that's the message this morning here. I'm Prashant, with me my colleague Surabhi and Mangalam. Guys, hi, good morning.
Hi, morning folks. And also, while of course, happy festivities to everyone out there in all parts of the country, actually, not just Maharashtra. It is very much a Maharashtra and Mumbai festival. But I've seen the fervor build in Delhi, for instance, over the last couple of years. So happy Ganesh festivities to all. But also a word of prayer going out for a lot of people absolutely devastated by those landslides, those flash floods in J&K, in Punjab, in Himachal. Heart-wrenching visuals coming in. Hopefully, things get back on track.
Hopefully things get back on track. We always say that Ganesha is the remover of all obstacles. So yesterday I said, may your roads be pothole-free, may your portfolios be drawdown-free, may your health be worry-free, may your relationships be extremely happy and worry-free as well. So those are a couple of things that we pray for. At the same time, we're looking at an important day today. Why do I say that? Because it's the August series expiry. But more importantly, it's probably the last time we'll say that it's the August series expiry on a Thursday. This is the last Thursday NSE expiry. From September series, you have monthly expiries on Tuesdays.
Tuesdays, right?
Yes.
For the Nifty, yeah.
Yeah, so, a bunch of things, and we will talk about all of this. We'll talk you through all of this as we sort of go on over the next 2.5 hours. But let me just quickly begin the session with what you need to know. And, I just wanted to start with the basic numbers in terms of what comes our way, right? This is the impact of the 50% US tariffs on India. 2024, Indian exports to US were tariffed at 2.5% average. As of the 7th of August, when it was 25%, the effective tariff was 19%. And 27th of August, with the 50%, which was kicked in yesterday, the effective tariff is 34. The effective is lower than the 50 because there are exemptions. That is the reason why the effective tariff, some say 34, 33, 35, but that's broadly how it's moved. So effectively, Indian exports to the US now are tariffed at an average rate of 34%. And by the way, this is one of the, with the harshest regimes in terms of where we stand, right? Just look at it. China is at effective 42. India is at effective 34. We're at number 2 around the world. We're pretty much neck and neck with Brazil, which is at 33% or so. That's the other point. Now, the impact of, and we'll sort of, we've been getting you so much opinion across sectors, etc. But India would be at a severe disadvantage, competitive disadvantage in pretty much all sectors, in terms of exporting sectors to the US. It's basically, and I said this on day one, 50, you can stack another 20, but basically it's a trade embargo at 50% because the competitiveness completely goes away. You can't pass on those kind of price increases across the board, even for things which are substitutable. Sectors most impacted, nothing new, textiles, gems and jewelry, machinery, chemicals. And remember, while markets have kind of, if you just look at it, right, YTD markets are higher. The Nifty is up, I think, 3-4% or so. Even from the point of when that first 50% was talked about, markets are higher from that point on. So it's not as if the markets have sold off. But a large portion of the impact is outside what is the listed universe, right? And these are all labor-intensive sectors. And that is the reason why the secondary implication of this in terms of loss of incomes, and that feeds through consumption, through the banking system, and so much more, which we will talk about as we kind of go through. Help from the government needed. I think the answer, if you talk to people in these affected sectors, is absolutely yes. So maybe a dedicated revival package, for example, what we saw during COVID, right? Garments, textiles, carpets, footwear, jewelry, dedicated schemes basically to help these sectors. Reinstate the interest equalization scheme aimed especially at MSMEs. Perhaps GST reforms, of course, are coming. Will we see a sort of, upping the exemption limit and again, aimed at the small businesses, etc. again, something which we will keep talking about, but I think it's an important one which we are hearing from the industry in many of these sectors. Now, just three comments, right? And the 50% I still maintain, I said this on day one, is not permanent. It's just about the fact that we've got to go through this pain, and hopefully this pain is not very long and something gets done and this 25% is knocked off. But we heard from three people, the US Treasury Secretary, and those comments I'll just quickly put those up. That's Treasury Secretary Besant, ending that comment by saying that at the end of the day, we will come together. Peter Navarro, US White House Trade Advisor, saying, well, India can knock off 25% if it stops buying Russian oil tomorrow. That's Navarro. And of course, Kevin Hassett saying, well, if Indians don't budge, I don't think President Trump will, basically saying that India has to move first and then Trump will. But ending by saying there's going to be ebb and flow before we reach the final position. I mean, essentially, what I'm trying to get at, both Besant and Hassett, and we've heard from all these gentlemen earlier as well, this is not the final position. 50% absolutely is not the final position, and this will get negotiated, hopefully, as I said, sooner than later. Just not very much to take you through in terms of Wall Street. You're going to react to 2 days of action, but the action is not too much. Wall Street up a little bit, the yield down 4, dollar index almost unchanged, oil prices down about 1% or so. And that kind of quickly gets me to the market here, specifically in terms of where we stand. So on the last session, which is Tuesday, we overlapped. On the downside, we overlapped the previous high of, which is the 12th of August, which is 24,702. Immediate downside level is 24,465 and then 24,337. These are the two supports that I'll be watching for. Resistance comes in at the 20-day moving average, which is the 24,739 level. For the Nifty Bank, which has broken the previous low, supports come in at this gap zone, which I put out on Tuesday as well, 54,055 to 54,442. And resistance comes in at the 20 hourly, which is 54,989, and the 40 hourly exponential, which is 55,189. GIFT Nifty will give you a quick sense of how we're likely to start. There's so many elements to this, right? But for now, it's about 50, 60 odd points lower, implied open at this stage. But F&O stats and how they're looking, Mangalam is standing by with that. Mangalam, over to you.
Well, it was a day of deep gash that we saw on Tuesday's trading session. The Nifty was down almost 255 points, taking away whatever gains we had made for August series and adding to the losses a little more. The volatility index, that spiked as well ahead of expiry and also ahead of the uncertainty that we saw in the markets. The Nifty closed below the 20-day moving average of 24,739. So on the way up, that will be the first mark to watch out for the frontline index. But importantly, it is the August series expiry today, the last Nifty expiry on a Thursday. More importantly, the Nifty has fallen 56 points in August series so far, with the GIFT Nifty indicating a 50-point downtick itself. Can we make up the deficit and at least close positive for the series or not is something that the bulls would be looking at after the 800-point decline that we saw in the previous series. The FIs, they continue to sell in the markets, 10,000 short contracts added, but more importantly, ahead of expiry, they've written way more calls than puts. Remember, on Tuesday's trading session, they had written a lot of puts, and those put writers were caught on the wrong side. Can the call writers be caught on the wrong side today or not will be the big question. 74,399 call contracts written on the short side. The put-call ratio at 0.72 is at the lower end of the range. Any commentary on trade resolution could perhaps spur an up move. And the 50-day moving average is at 25,013. That could be an important resistance to watch out for on the way up. The reason why I say could call writers be caught on the wrong side today, 24,750 call, 24,800 call and 24,850 call. All these three strikes on the Nifty put together have added 2 crore shares in open interest. So if the market does somehow sustain above that 24,800 mark, we could see all these writers go for cover. But importantly, not only is it the last Thursday expiry for Nifty, it's also the last day in the F&O for 8 stocks. So those are the stocks we'll be watching out for, particularly in the last 30 minutes of trade for any wild swings. AB Fashion and Retail, we have IRB Infra, Granules, Jindal Stainless, names like Poonawalla FinCorp and SJVN as well. The last day in F&O for these stocks.
Okay, all right, so that's F&O. Asian markets, by the way, are largely holding up. There's more green than red on Asian screens, but we have our own issues and our own woes to deal with. So let's see, we'll get the implied open up on the screen if we can before we move to the equity call of the day. So the Hong Kong markets are showing some red, but most of the other regional markets are holding up. And the suggestion is that we'll start another 50 points on the lower side, and more hawkish commentary coming in from a lot of US government representatives. We'll get to that in just a bit. But first, the equity call. Vikash Jain of CLSA says a notable GST rate cut coupled with the impact from a ban on real money games and a likely miss in direct tax collection could pose a potential revenue loss to the central government equal to 22 basis points of GDP and a significant one for states. He says if the government sticks to its fiscal deficit target, we see clear risks of a curb in capex of both the centre and state governments. He says a half-hearted GST rate cut next week may force a retreat in the recent consumption rally. But a clear reduction may not only provide further impetus to consumption stocks, but would also be seen negatively for capex plays and other revenue sources like oil marketing companies. Okay, well, that's the CLSA call. But for now, just to go back to that hawkish commentary that Prashant was alluding to earlier, because the statements that are coming in from the US, they're not getting any better in terms of any potential climb down between the trade issues and the tariff issues between India and the US. White House trade advisor Peter Navarro cranked up pressure on India to halt its purchases of Russian oil, saying that the road to peace in Ukraine goes through New Delhi. Navarro added that India and China must stop buying Russian oil and that tariffs on India can go down by 25% if India stops buying Russian oil. Let's in fact also listen in to what US economic advisor Kevin Hassett and US Treasury Secretary Scott Bessent said on the US-India relationship.
I think that it is a complicated relationship, that it's integrated some with the problems that we're trying to put extra pressure on Russia so that we could get a peace deal to save millions of lives, and the Indian intransigence about opening their markets to our products. And so I think that when you're looking at trade negotiations, one thing I think we've all learned is that you need to keep your eyes on the horizon and recognize that there are going to be ebbs and flows in things before we reach the final position. And if the Indians don't budge, I don't think President Trump will either.
President Trump and Prime Minister Modi have very good relationships at that level. And it's not just over the Russian oil. The Indians came in very early after Liberation Day to start negotiating on tariffs, and we still don't have a deal. I thought that we would have a deal in May, June. I thought India could be one of the earlier deals. And they've kind of tapped us along in terms of the negotiations. And then there is also the aspect of the Russian crude purchases, which they've been profiteering on. So there are many levels going on here. I do think India is the world's largest democracy. The U.S. is the world's largest economy. I think at the end of the day, we will come together.
Well, let's see. Well, that's what one hopes for, but we haven't seen any sign of that so far. Mark Matthews of Bank Julius Baer is with us. Mark, great to have you on. You know, all this, I don't know if you could hear some of that commentary. We were playing out sound bites from a lot of U.S. administration officials. It's very clear that there is no breakthrough just yet. And the tariff is here. 50% is a reality. Now, while it might be just 2% of Indian GDP, it still seems to be weighing on sentiment. Your thoughts on what this might mean for the equity market here in the near term?
I can see why it would weigh on sentiment, because obviously the U.S. is the biggest capital market in the world, and the S&P is the benchmark for equities. And so it would be better to have a good relationship with that country, despite all the trials and tribulations it's going through. And frankly, the weakening of the institutional pillars in that country, in a small way, this breakdown in the relationship with India could be a manifestation of that. So anyway, what I'm trying to say is that it's sort of what happened to China a few years ago, and I just hope it doesn't get anywhere near as bad as what happened with China. I don't think it should. The Washington Post published an article yesterday called The U.S.-India Breakup, a Personal Dispute with Global Implications, and it listed two reasons for this happening. The first was Trump being angry that he wasn't being given what he thought was credit for mediating a ceasefire with Pakistan in May. And the second is that apparently a deal was finalized by the U.S. trade representative, but he wouldn't allow it to go through because he wants American access to the Indian agriculture market, particularly American dairy. Now, with this first issue of his purported mediation of the dispute between India and Pakistan, I don't see why that should continue to be an issue. He just got angry. But I can see this access to the Indian agricultural market as being a bigger issue, because if Trump really wants access to it, it is a problem. And I'll quote from the article, a fellow at the Hoover Institution, Sumit Ganguly, and he said, agriculture and dairy is sacrosanct in India, and it would sink any government in India if they agreed to open up those markets. I don't know if that's true, but if it is true, then this is not something that will be resolved easily.
Mark, I heard, I mean, these are all theories, right? And you're right, I mean, some of this has been going around for a while. Good morning. There's one more that I heard over the last couple of days, which is that maybe, China is using its influence and its leverage with the US to try and sort of, in a way, trade-wise hurt India. As I said, who knows? All these are moving parts. Any thoughts, Mark?
I don't think so, but I hadn't heard that one. The Vice Minister of Commerce of China is in the United States, and he will be meeting with officials today and tomorrow. I suppose if those kind of people who play geopolitics, those kind of Machiavellian politics, maybe that makes sense. But I would have thought this is actually an opportunity for China to better its ties with India, which it seemed to be doing. I'm a little surprised to hear that.
Right. Machiavellian or not, whether it's India, China, China, US, India, US, whichever way you triangulate it, the point is what is going to make your portfolios money, right? So from here on, how would you view your investments in developed markets, emerging markets? In emerging markets, India versus China, is India beginning to fall out of favor? Because it has been underperforming, the earnings growth hasn't been coming by, and now there is this uncertainty of tariffs as well.
Well, I think there are two things going for India. And the first is, I alluded earlier to this erosion of trust in institutions in the US. And there's a long and growing list of examples of this. For example, the bullying of Fed Chairman Jerome Powell by President Trump, which has been going on for years. But then more recently, he fired Lisa Cook, one of the Fed governors. That's unprecedented. The government has taken a stake in Intel for $11 billion. That's also unprecedented. And the Commerce Secretary, Howard Lutnick, alluded to more investments by the government in other industries, including defense. And he specifically mentioned Lockheed Martin. The government has just suspended work on an offshore wind farm run by a Danish company called Ørsted that was 80% completed. Citing national security concerns. Anyway, I'm telling you all of these things because I think that this erosion in trust toward the U.S. government and its unpredictability will cause a continued weakness in the dollar. We're looking for at least another 5% downside in the dollar versus other currencies over the next year. And so first point is that a weaker dollar would be supportive for emerging markets, of which India is obviously one. And the second is the earnings, which we know were pretty pedestrian in the most recent quarter and will probably be in the current quarter just because of the monsoon. But then with the festive season and all of these rate cuts that the RBI has done and the tax breaks that the Prime Minister announced on Independence Day, I could see an acceleration in earnings growth for the next quarter and beyond. And that ultimately is what will move share prices. So if we can get back up to double-digit earnings growth, which is our expectation next year, then the market will start to think about that now.
So still a buyer of Indian equities, Mark? like you have been?
Yes, we haven't changed our opinion. I'm very sorry about the state of relations between India and the United States, but I'll just say I'm Canadian, and our relations haven't been very rosy either with the United States for several years, and it hasn't stopped the Toronto Stock Exchange from going up.
Yeah, absolutely. And ours is, I mean, a far bigger domestic story than it is a trade story in any case. So take your point. Thanks very much for joining in. You have a great rest of the day. Well, with that, let's quickly move on and talk about some of the other interactions that are coming up for you over the next 2 odd hours. At 8:35, we'll have the management of Gulf Oil joining in to talk about the company's supply chain in light of heavy rainfall in northern India and, of course, their outlook after the first quarter. At 9 a.m., we'll have Abneesh Roy of Nuvama Institutional Equities joining in. It's all hopes pinned on FMCG and a revival in the festive period. So how is Abneesh viewing it from his lens? We'll ask him. At 9:20, Gautam Shah of Goldilocks Global Research joins in. He's our market master of the day. Do some important chart checks with Gautam. After that, Shikhar Agrawal of BLS International joins in. At about 9:45 a.m., we talk about the company's recent order win from the Unique Identification Authority of India. It's a pretty large order, so how does it change things for the company? We'll discuss that. And towards the end, in our special segment, It's the Economy, Lata speaks with Jahangir Aziz of JP Morgan on the impact of the 50% tariffs on India.
A lot lined up for you on the show. Let's take a short break, but as we do that, let's also tell you a lot of the stocks that we've lined up for you in terms of specific action to track today. We'll get to all of them in just a bit in our special top 10 segment, but for you to get a quick preview, we're looking at TCS, HAL, United Breweries, Sami Hotels, Escorts, Kubota, RVNL and Texmaco Rail that are on our radar on the back of positive news flow. Interglobe Aviation, ICICI Lombard, New India Assurance are some of the stocks which may open in the red on account of news backing them.
Welcome back. Well, how will the bulls fare today, given that it's the monthly expiry, given that Qs have been a little negative on the trade front at least, and the implied open has been telling us it will probably start 50 points lower. Let's get it back up on the screen. Asian markets are mixed. There's some red in Hong Kong, but the other markets, regional markets like Japan and Australia, they're actually doing well. But there you go. Implied open is now showing further downside pressure. So Nifty perhaps starts a little further away from the 25,000 mark. Okay, so let's straight away get to our list of top stocks to watch as well. Our team is standing by with the top ones that we need to watch out for. Guys, morning to all of you. Rima, let's start with you. TCS, what's on the radar?
Thanks so much for that. So TCS has announced the formation of a new AI and Services Transformation Unit. So basically, this would be a dedicated AI unit. They've appointed a Global Chief Officer, Amit Kumar. Perhaps earlier, all the AI offerings were scattered under different segments and, domains, etc. Now they're going to have centralized AI services, and a lot of the rivals have already launched a centralized dedicated AI unit. So the idea perhaps would be to consolidate, get all the AI data industry-specific solutions which have been scattered into different service lines into one unit, integrated under one umbrella, scale it, commercialize it, and then perhaps even forge partnerships. It's a good step. So we'll watch for TCS today.
All right, that's about TCS. But Vivek, Interglobe Aviations, there will be a large block trade on that one.
Well, that's right. Since September of 2022, the Gangwal family, also along with the Chinkapu Family Trust, belonging to the same entity, has been consistently going ahead and paring down their stake from almost 35%. At the end of the previous quarter, they held a little over 7.5%. Today, what we understand from our sources, and we also managed to access the term sheet that came out yesterday evening, is that Rakesh Gangwal as well as the Chinkapu Family Trust are looking to sell a combined 3.1% stake in the company. The floor price for this particular block deal is at close to 5,808 rupees a share, which indicates that the total size of the block will be in excess of 7,000 crore rupees. Now, there is, like in previous instances as well, there is a lockup of almost 150 days on further sale of shares. It will be interesting to see how the stock reacts to this particular development, given the fact that now they will be left with just likely one more tranche of stake sale before the entire stake gets absorbed.
All right, Vivek, thank you very much for that. More on Interglobe as we go along. But let's talk about HAL, Hindustan Aeronautics as well. Ria has got details. Ria, good morning.
Good morning, Prashant. HAL is likely to be in focus today since reports suggest that India is likely to ink a $1 billion deal, fighter jet engine deal with GE by the end of this month. Now, this is to buy 113 more of its GE 404 engines for the 97 LCA Mark 1A aircraft, the procurement for which was recently approved by the CCS earlier this month. Now, this engine deal is likely to be finalized by September in this year. And in terms of deliveries, HAL is scheduled to deliver the first batch of the 83 LCA aircraft by FY30 and the subsequent 97 LCAs by FY34. Now, additionally, HAL is also in advanced talks with GE to procure 200 of its GE 414 engines for the upcoming LCA Mark II and also for India's fifth generation fighter project, which is the AMCA. Now, this proposed $1.5 billion deal is likely to include an 80% transfer of technology, and this particular deal, which has been in the works for the last several months, is now in advanced stages of negotiations and is likely to materialize over the next few months.
Okay, all right. So maybe those engines finally make their way to India and HAL will be in focus on the back of that. Got it, Riya. Thanks very much. Let's get to Vamakshi. Vamakshi, we were just talking about this earlier, right? Absolute devastation because of the floods in many states. Would it have perhaps some bearing on the insurers?
Well, absolutely, Surbi. Unfortunate turn of events there. Heavy rains and floods have wreaked havoc across Jammu and Kashmir. In fact, flash floods have washed away houses as well as a bridge in Chitwar. Such situations typically lead to a surge in claims over vehicles as well as immovable property damages, and insurance company in turn face higher payouts, and this in turn cause increased financial liabilities for them as well as a re-evaluation of risk assessment. In fact, if we take a look at the past as well, now in Q2 of FY24, which is the July to September 2023 period, New India Assurance had actually incurred a net catastrophe loss of almost 301 crores, and this in turn had significantly impacted its profitability. Obviously a very devastating event that has unfolded and resultantly expecting dread on screen for ICICI Lombard as well as New India Assurance.
All right, we take that point. Unfortunate events in the northern part of the country, and insurance companies may be impacted on account of that. Let's look at a couple of stocks that I'm watching out for today. United Breweries, they've doubled their premium beer canning facility in Telangana. Remember, Telangana is the government where they had a bit of an issue with when it came to prices as well. Now that has come about in favor of the company, so that benefits their margins. But the company has been looking to expand their premium beer canning facilities as well. They will invest 90 crores in capex for that over the next 1 year or so. Their overall canning capacity out there will increase from about 0.5 million hectoliters, 1 hectoliter is 100 liters, to about 0.9 million hectoliters. So within a year, their capacity out there effectively doubles. Good for the company. Sami Hotels as well. They've signed an agreement to lease 260 rooms mid-scale hotel in Hyderabad's financial district. Normal course of business for a company that runs hotels to add another hotel to their portfolio. But this is just a positive news. So I put both these stocks on our radar.
Absolutely. Mangalam, thanks very much for that. Well, Escorts Kubota is the next one we're going to focus on. Sudarshan is here to tell us why. Good morning.
Good morning, Prashant. So Escorts Kubota has made 3 new launches. One is the new launch of the tractor, and 2 launches are the upgraded version of the earlier tractor that company had. So first one is it's Kubota MU4201, and that is targeting entry into 41 to 44 horsepower category market in India. Remember, it's the biggest market in India as far as the tractor segment is concerned. Another 2 launches are first the upgraded version of Kubota MU4501, and the second is Kubota MU5502. So the target for this upgraded version of launch is to increase the presence in the new market and in those states which have strong presence of agri tractors. Now 41 to 50 horsepower category currently forms around 60 to 64% of India's domestic market. Now, these launches also come at the time when this tractor is the one segment which is seeing a healthy growth if you compare to other segments. So, it will be taken positively.
Okay, all right. So got it. Thanks very much. So Escorts on our radar as well. Let's head across to Vinny. She's watching out for RVNL as well as Texmaco Rail. Vinny, hi. They've gotten into a JV of sorts, right?
Absolutely. There's a JV that's signed between RVNL as well as Texmaco Rail. Now, in this JV, this is mainly going to be focusing on accelerating railway modernization. So a lot of use of new technology is what they'll be focusing on. In this JV, Texmaco will hold 49%, RVNL will be holding 51% of the JV. Focus areas, rolling stone, so they'll be rolling stock, I beg your pardon. So they'll be focusing on that, manufacture, supply and maintenance of freight wagons, coaches. That is a focus area. Other than that, AI technology is what they want to focus on as well. So using AI for development of these. EPC projects, so this will be leveraging benefits in terms of execution of railway as well as allied infrastructure for EPC contracts specifically, and geography-wise, domestic as well as exports is what they will be focusing on. So we're expecting green coming in on screen for both these stocks today.
Right, Vinny, thanks a lot for that. Rolling stones on your mind as we move towards the weekend and come back after a holiday as well. But be that as it may, rolling stock is what this agreement is for. In fact, we'll speak to the managements in a short while from here on as well to get more on this joint venture. But in case you missed it, a quick recap of all our top stocks. Stocks with positive news flow: TCS, HAL, United Breweries, Sami Hotels, Escorts Kubota, RVNL and Texmaco Rail. Well, stocks with negative news flow, we have Interglobe Aviation, the impending large trade. We have ICICI Lombard and New India Assurance. All right, let's get across to Manisha Gupta now, who joins in for a quick roundup of all the action from the commodity market overnight. Manisha, a lot happened.
Morning, and thank you for that. Well, I'll start with the crude oil prices, where we are looking at some support continuing because the U.S. inventories have declined more than what the street was anticipating by 2.4 million barrels. Not just the crude inventories, but there's a sharp decline in gasoline and distillate reserves as well. Remember, this is a decline coming in ahead of the long Labor Day weekend in U.S. This also marks end of U.S. summer driving season, and the decline in inventories does show a stable demand going forward. So that really has been supportive. What the markets also are looking at, though, is the metal prices, where we are looking at gold near 2-week highs, silver holding near 1-month highs. The demand from the industrial sector seems to be increasing. And apart from that, it also is about the uncertainties, especially coming in from the U.S. Fed autonomy. China gold buying has been on the stronger side. China's central bank actually has bought gold for their reserves for the 9th month in July. And then Vietnam, which is the third largest importer of gold in Asia, also is now abolishing a 13-year-old state monopoly in gold trading and allowing businesses, commercial banks to come in as well. So that means more buying from there could be happening as well. For the industrial metals, whether it's copper, iron ore, zinc, everything is trading at a multi-week highs right now. So many of these commodities actually starting Asia today on a stronger note.
All right, Manisha, thank you very much for that. So that is, commodities in focus and, of course, gold top of mind for Manisha. Let's talk about the brokerage calls of the day. Sudarshan is back. Sud, what's on the radar?
So when the Russian oil purchase in the news, so I've taken the brokerage note on OMC. So first one is HSBC has written note on OMCs. It expects strong earnings given lower oil prices and reduced LPG losses. It believes that any payouts for under recoveries will be taken positively, and it has a buy call on all the three oil marketing companies, IOC, BPCL and HPCL, with a target for BPCL at 420, for HPCL 520, and for IOC it's 190. There is another note that has come from JP Morgan. It believes that stocks have been under pressure despite strong core earnings that company had seen in the past few quarters. Also, risk reward appears favorable and stocks are cheap if you take a look on FY27 earnings projections, and there should be little downside even if taxes on these companies are raised. Amongst all the three oil marketing companies, it prefers BPCLs. Now, next is Morgan Stanley has written on real estate. It believes that July launches are weak, and it was the first dip that the sector has seen in last 4 years, but it can catch up in August and September. Also, as per July trends, preferences Lodha and Prestige states. It believes that Q2 sales have strengthened across and unsold inventory has marginally seen a decline. Mumbai and Bengaluru recorded the highest growth in sales. As far as price growth is concerned, it did see a moderation if you compare against last 2 quarters, but it was strong at 5% YOY. And NCR saw price growth of 19%, followed by Mumbai and Bengaluru at 7% each. Last one is autos, and it's on the back of GST. Jefferies has written, it believes that potential GST cut should provide a boost for auto demand, especially for two-wheelers and smaller passenger vehicle segment. It has raised FY26-28 two-wheeler and PV industry volumes by 2 to 6%, and in resultant, EPS estimates for some of the companies have increased in the range of 2 to 8%. Those companies are TVS, Hero Moto, Maruti and Hyundai. It believes that TVS and M&M will deliver highest 27% and 19% FY25-28 EPS CAGR respectively, and preferred buys are TVS, M&M and Maruti. Also, it has upgraded Hero Moto to hold from underperform but has retained underperform for Tata Motors and Hyundai.
Okay, all right. So got that. So we'll keep the auto names on our radar. And also that stat from Morgan Stanley is impressive. 19% year-on-year growth in pricing in NCR real estate. That's quite something. We'll take a break on that note. Come back on the other side. Connect with Deepan Mehta, director at Lexer Equities, and talk about some fundamental stock ideas. Welcome back. You're with us on Bazaar Morning Call. Let's get into a conversation now with the management of Gulf Oil. Ravi Chawla, Managing Director and CEO at the company, is with us to take a couple of questions. Mr. Chawla, great to have you on. We want to focus on 3 key points today. And for the benefit of our viewers, let's just lay them out. The company's had a great start to the year, first of all. A double-digit volume growth, industry-leading volume growth, really. Good revenue growth as well. So what's the outlook for the rest of the year? Then, of course, we want to understand more about the current capacity expansion which is underway, what it means for the company and how it can perhaps boost volumes further. And finally, the outlook on the company's EV charging subsidiary. So those are some 3 key areas that we want to put the spotlight on. Mr. Chawla, thanks very much for being with us. Like I said, you've had a great start to the year. I think nearly 14% revenue growth, 11% volume growth. Is this kind of momentum likely to continue through the rest of the year? What's your outlook, and which segments would you expect to drive this sort of growth going forward? How is the overall FY26 looking like?
Yes, so I think the start in the first quarter has been very strong for us. We've nearly done 3 times the market growth rate. So I think that augurs well. All our segments are firing. I would say it's like an all-rounder in cricket. We've been able to take all our segments, B2C, B2B, industrial, OEM. The agri segment was looking good in the first quarter. Obviously, the seasonality is there. So I would say all our segments which we are focusing on, B2C is doing well, rural is doing well. The outlook has always been for us that whatever the market growth is, we do 2 to 3x. And in areas where we have lower than 5% market share, we try to do more. So we maintain that outlook. Of course, the current quarter will be a monsoon quarter. Demand-wise, it's slightly lower. But for the year, I think we would continue to make sure that all the segments that we focus on grow the way it is going. A great start because we've had the highest revenue, highest volume. We're doing well across. And that's where we look at the year.
Yeah, Mr. Chawla, since you mentioned monsoon, actually, let's just get that question out of the way as well. How much of your sales geographically come from the northern states, whether it's Punjab, whether it's Himachal? And I just want to understand if the scale of disruption right now, logistics disruption across some of these key states, whether that has any bearing on your volumes. How much of your volumes are coming in from these northern states anyway?
Yes, I was just checking this morning with my supply chain. We don't see any major disruption. Some places in Uttaranchal and Northeast are affected slightly, but we don't see that. And I think our sale is usually we have about 6-7% market share in that area. So I think we are okay with that. It doesn't seem to be that big a disruption as of now.
All right. So you are confident of maintaining your growth momentum that you saw in the first quarter throughout the year, give or take some few points because of seasonality in the second quarter. You will grow between 2 to 3x the industry. That's good to know. What about capacity? Because you have embarked upon some capex. What is your current capacity utilization? What is the ideal asset turnover that we should look at on the capex that you're making? And by when does all of that come on stream? What does that do to your volumes?
Yeah, so I think last year we closed at 152 million. I think we have a capacity on a two-shift basis today in both our plants is about 90 and 50, so 140. But we operate on 2.5 shifts, so our capacity utilization per se would be currently at about 95%. So looking at what the growth momentum is, and of course we had COVID in between. Otherwise we would have announced it a few years back. But we are getting ready for the next phase of growth. I think we don't want to operate three shifts because that's not, and we do make all our products in-house, lubricant products in-house, which is one of our strengths. And we will build this capacity up. The augmentation has already happened. We had some land acquisition in Silvassa, one of our plants, a few quarters ago, and now that's ready for really putting it out there. And we'll be increasing capacity from the current level by 70% to reach 250 million. In about 18 months, we are hoping that all the capacity will come online. In phases, it will already start in our Chennai plant. So that's the plan, so that we are ready for the growth that's going to happen. And of course, our plants will be able to service all India, and we do some exports. So I think that's the way we are preparing ourselves.
Just a small follow-up on that, if you could give us a sense on the amount that you will outlay for the capex, in what segments will your capacity be, or is it segment agnostic? And in terms of capacity, post this capex, what would be your stated capacity market share?
Yeah, so capacity today we are about 6-7% of the market in some segments. Percent. So this capacity of ours will go up in both our plants, and will go up from the current I think 140, 150 to about 250 million. And we will it's as you said, segment agnostic. It's about packs, various sizes of packs, from the barrel packs to the small packs. So we augment our lines, filling lines in terms of that. Our blending capacity goes up. We have a sophisticated international, what we call automatic batch blender from France. We will augment that in Chennai. And obviously we have, different tankages to be set up, back end. So all that is there, and it's agnostic. So as long as the demand is there, the pack sizes, we as per that, we lay out the filling lines, etc.
Okay. All right, Mr. Chawla, we'll leave it on that note. Thanks very much for joining in. Good to get that perspective on the business. So strong start to the year, strong outlook, and not seeing too much of an impact because of the flood-related disruption in some of the northern states. Got that. Let's welcome in Dipin Mehta into the conversation. Dipin, good morning. Always a pleasure to have you on. So plenty of stocks to discuss. I'll start with Hindustan Aeronautics. Because of this whole buzz around the GE engine deal and more engines coming, large deal as usual. Everything is big when it comes to HAL, right? $1 billion. What's your sense on the stock and the valuations now? Would you look at dips to buy?
Yeah, good morning, Surbi, and thank you for having me on your show. Yeah, absolutely. I think it's a buy on dip story. But, HAL has been well discovered. Its prospects have been discussed threadbare. And we all know that it has got a very strong order book position, so great visibility. And defense stocks, not only in India, but globally are in focus. They are the fancy of the investors. So a lot of the positives have been captured in the stock price. So I think that the risk return doesn't really favor if you buy at these levels, but at corrections, certainly I think on a quiet day when the stock is not in the news, one could look at entering into it afresh. I think existing investors, for them it's an easy choice to remain invested, companies going from strength to strength. And I wouldn't worry too much about the valuations. I think globally we are seeing valuations of defense contractors inch up as well. And investors are looking for stories in that particular space. So positive, but I think it's more like a hold at this point of time than a buy.
Right. What's your view on Interglobe Aviation? Because, periodically there are these supply events that happen from the Gangwal family, but now they're left with just about 3.5% stake, assuming today's stake sale goes through, and in all likelihood it will. Immediately after a stake sale, it is a 150-day lock-in period, and the stock enters the Nifty as well. Things looking good for them fundamentally. They've gained market share as well. So do you think this dip on Interglobe Aviation, despite the stock being at record high, will be a buying opportunity?
Good morning, Mangalam. First, a disclosure that Interglobe Aviation is there in our portfolios and that of our clients, and we are extremely positive on the stock. I would rate it as a part of, should be a part of a core holding of investors. And this is one company, I think, where really the market share is so huge and the runway for growth is still quite strong. And they haven't even scratched the surface when it comes to international routes. A very well managed and efficient company, reasonable valuations, but you have to stomach the volatility in earnings because there are far too many moving points. There is, of course, the exchange rate, there is the aviation fuel, and there are seasonalities. and geopolitical events as well. But point to point, like if you have a holding horizon of 3 years, 5 years, 10 years, this company can deliver solid returns. And I'm glad it's part of the Nifty because anyway within the Nifty, we were struggling to find companies which can show sustainable growth above that 15-16%. And certainly Interglobe Aviation is one of them.
Deepan, hi, morning. These tariffs as they go into effect, right? From a listed universe perspective, the impact is quite limited. I'm sure you've spoken to people in your circle who have businesses, etc. It's going to be tough till the time that they stay, and I hope this 25% gets knocked off soon. But we don't know timelines to it now. That's come into effect. For the purpose of the conversation here, from a listed perspective, how do you think about implications? I was thinking for one area, we talk about textiles and gems and jewelry, etc., and those stocks, some of them have taken a hit. But banks and financial services, right? They are the most economy exposed. And you think, especially, I don't know about exposures, and we'll have that data. Our colleague Ritu will work on that, and we'll put that out in a bit. But do you think it's an area where we need to be a little watchful?
Good morning, Prashant. First, the good news that the worst is over. Now, whatever happens from here will be positive. So beyond 50%, we can't expect tariffs from US President Trump. And now the fact that this particular event has happened, it has been discounted. And you're right, I think end of the day, it's not impacting much of the listed players, but it's certainly sentimentally negative. And it does cast kind of, I would say, cloud on the economic growth, but the government is pushing very hard on interest rate front, on GST cut, on taxation, and on pushing private sector and public capex. So the government is doing everything under its control to boost the economy and kind of negative or neutralize the effect of this particular tariff. And whatever happens, I think economy, companies, industries will deal with it and move on. They'll find new markets, or they take manufacturing overseas. So I think that will take place in a matter of time. But at least the worst is over in the price per se. From your specific question about banks, now I don't think banks are going to get impacted so much because of this particular event. These days, lending to corporates, MSME, SMEs is very, very, I would say, disciplined, and they have got good coverage over there. Banks are far more vigilant than ever before. So you could have a minor creep in NPAs. But by and large, I don't think that banks will be impacted because of this particular event. But as I said, I think the most positive thing is that it's over and done with. This uncertainty we've been dealing with is now finally over. And I think markets and investors will kind of move on. In any case, we are looking at India-centric companies as well, a lot of other investors, and that particular strategy always paid off.
Absolutely. I hope that is the case, right? It's a small creep and that's it. But we'll, as I said, try and get the data out and put it up for you as we kind of go along through the course of the day. We'll take for now a quick commercial break. There's 11 minutes to go for the pre-open session to kick off. Sudarshan and Shilpa are going to be with us on the other side with some technical trading ideas as well. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a cut of over 50 points as we kickstart trade today. It's the monthly expiry day for the August series, for which the Nifty has already lost about 55 points. But there were a bunch of movers on Tuesday's trading session with a huge amount of volume and delivery data as well. Hormaz has stacked those numbers up for us. Hormaz.
Morning, Manglam, and some interesting movers on the volumes and the delivery front, and Sun Pharma was one of them. The stock, of course, fell after that BOFA downgrade on Tuesday, snapped a 4-day gaining streak. But an interesting observation over the last 10 sessions is the fact that the volumes when the stock falls have always been higher than the volumes when the stock has moved higher in these last 10 trading sessions. Now, you take a look at Tuesday's trade itself. You had 45 lakh shares shares changing hands compared to a 20-day average of just around 24 lakh, and almost 28 lakh shares out of those were marked for delivery compared to a 20-day average of just around close to 15 lakh shares. That was Sun Pharma. The other one that managed to buck the trend amidst all of this broader market sell-off on Tuesday was Craftsman Automation, and this stock has gained in 4 out of the last 5 trading sessions, and in the last 3 months we've seen the stock gain more than between 3 to 7% on at least 5 instances, and all 5 instances have resulted in very high volumes compared to the usual trading volume that the stock has. Now, even on Tuesday, almost 2 lakh shares changed hands compared to a 20-day average of just 70,000, and almost 1.25 lakh of those shares were marked for delivery compared to a 20-day average which is just 25,000. Now, the stock has already been a wealth creator, almost 5x from its IPO price of 1490. The IPO came in March of 2021. PG Electroplast is one of them, and it's not necessarily on the volumes front, but how trading activity has increased in the stock after that big fall it saw on the day when it cut its guidance after its results. Now, take a look at this. Before the 8th of August, from starting of the year till the 8th of August, the usual trading volume for PG Electroplast was close to 20 lakh shares or 25 lakh shares. After the 8th of August, the daily average of the last 12 trading sessions has been almost 90 lakh shares in PG Electroplast. Now, on Tuesday's session also, we saw at there have been 5 instances in these last 12 sessions where there more than 1 crore shares have changed hands in a single day. Now, if you compare that to from the start of the year till the 7th of August, there was only one such instance where more than 1 crore shares changed hands in a single day. Now, even in Tuesday's session, because of this heightened activity, 80 lakh shares had changed hands compared to a 20-day average of 93 lakh shares because of this heightened trading activity, and 21 lakh shares out of those were marked for delivery which is also lesser than the 20-day average of close to 22 lakh shares. So, heightened activity in PG Electroplast and Craftsman Automation managing to buck the trend in a broader market sell-off.
Thanks very much, Hormuz, for that. But we want to sort of talk about some more data with regards to blocks, right? And the deals data there. Hormuz, tell us more.
There were a lot of blocks that took place. Of course, a lot of the adjustments were related to the MSCI rebalancing. But aside of that, there was a block that took place in Edelweiss in the pre-market block window on Tuesday, where Abacus Asset Management, the Sunil Singhania firm, was the buyer here, almost 65 lakh shares, buyer at around 100 rupees a piece. And it is the Edelweiss Employees Incentive and Welfare Trust that was the seller in that transaction. And the other one, of course, was Veranda Learning, where Goldman Sachs was a buyer of close to 8 lakh shares. Autumn Investments was a buyer of close to 60 lakh shares, and Kalapati Subramaniam Ganesh was the seller in that transaction. And lastly, there was Vikram Solar, the newly listed company, listed on Tuesday, ended substantially higher compared to its issue price, and here it was Plutus Wealth Management that was a buyer of more than 20 lakh shares at close to around 350 rupees. The stock eventually ending at a 7% premium compared to its issue price on its trading debut.
Take that point, Hormaz. Thank you so much for that. In fact, we had the management of Vikram Solar join us on the channel as well. They were confident of that 30-35% sort of revenue run rate going ahead, along with the margins being maintained for their business. But speaking about block deals that happen, let's talk about block deals that are likely to happen. Sudarshan joins in on Interglobe Aviation. The Gangwal family is selling. Sudarshan, they've been selling at higher prices every time.
That's correct. So as we are coming out of COVID-19 in 2020-21, one news came out that there was a dispute between promoter in the Indigo, and that was a dispute between Rakesh Gangwal and Bhatia family that led to Gangwal deciding to exit the company over next 5 years. Now 3 years is done, and Gangwal has already offloaded nearly 29% of its total 37% holding that he had ahead of 2022. So if you take a look at the stock return, this year stock is up almost 33%, and it's up 14% since the last block days. But if you take a look at the stock return, since the first time that Gangwal had sold the stake, it's up more than 200%. So in 2022, he announced an exit over 5 years, and so far he has raised more than 40,000 crore by selling 29% stake. Holding in June 2022, around 37%, that was 36.6%. In June 2025, holding has reduced to 7.81%. Now, after today's block days, holding of Gangwal and his trust will come down to 4.7%. So take a look at the timeline. In September 2022, sold 3% and raised nearly 2,500 crore. Feb 2023 sold again 4%, raised almost 3,000 crore. August 2023, nearly 5%, raised more than rupees 4,200 crore. Come to March 2024, sold nearly 6% and raised more than rupees 7,200 crore. August 2024, sold again almost 6%, raised almost 11,000 crore. And last block deal was done in May 2025 when he sold nearly 6%, that was 5.7%, to raise almost 12,000 crore. And except if you leave one block deal, almost all the block deals have happened at a premium to last block deals, and that premium was in the range of almost 10% to as high as 47%. So today's block deal, he's going to sell another 3.1%, and for that, floor price is around 5,800 per share, which is a discount of around 4% to yesterday's closing price, basically Tuesday's closing price. And he's going to raise more than 7,000 crore. So after today's block deal, he would raise almost 47,000 crore and would have offloaded almost 33% stake of total holding, and after that his holding will come down to 4.7%. So how would promoter holding look after today's block deal? Total promoter holding will be 40.44%, of which Bhatia and Interglobe Enterprises will hold 35.73%, and Gangwal and his trust holding will come down to 4.7%. So what started with a dispute, now it's known as a systematic exit that Gangwal had with the company, and now he would be his holding will be 4.7%. In all probability, 8%. The most next block deal that might happen in early 2026, he might exit the company.
Sure. Got it, sir. Thanks very much. So raising over 40,000 crores over the last couple of years. That's a huge amount of money. That's the Interglobe story with respect to at least one of the promoters. Quick break on that note. Come back on the other side and we'll have a lot more for you, including, of course, the pre-opening rates.
Okay, well, 13 minutes to market open, which means the pre-open is already kicked off, and we should have the rates up on your screens. The Nifty, the other indices, etc., everything should be on your screen. So, yeah, I mean, this is early on. Give it 3-4 minutes more and things will start to reflect the real rates in terms of how the book, etc., is being built during the pre-open session. Sudarshan and Shilpa Rao are with us with a quick technical check on things and what they'd like you to do. Thanks, both of you, for joining us. Sudarshan, both of you, festive greetings. What's the trade? On the index, Sudarshan, to begin with, and then, of course, we'll get to stocks.
Yeah, good morning. Well, on Tuesday, the suggestion was to go short in the Nifty. Unfortunately, that view continues. I would have thought that, every day the view changes, but the fact remains that the Nifty had a bad day on Tuesday. It fell a lot. The reasons are the same as valid today. There is a resistance at higher levels. The gap up that we saw and has been filled. And the much bigger reason is the Bank Nifty. The Bank Nifty confirmed a very bearish pattern on Tuesday. Now the Nifty is relatively outperforming the Bank Nifty, but it's unlikely to go up if the Bank Nifty continues its slide down. So all said and done, intraday we may have different, movements. That doesn't matter, and especially because today is F&O expiry. But the positional trade is to look for locations, look for small rallies to build short positions.
All right, sell on rallies is what your call is from a positional standpoint. Shilpa, we come to you for your view as well. While we were giving festive greetings to everyone, what we forgot was that the Jain community as well is celebrating the end of Paryushan. So what they say every year is Michhami Dukkaram. They ask for forgiveness. It's the beauty of our country. Every day you can, celebrate a festival, still miss out on a large part which is celebrating another festival. So here's a greeting coming out to the Jain community too. But Shilpa, your views on the markets?
Good morning. And if we talk about market, we see the FIs have marginally, of course, increased the net longs to 14%. But of course, if you see the setup, it looks little weak. Nifty should find support at 24,600. We see that PCR there lies above 4. So that is where it should have some sort of stability. And Bank Nifty should hold some ground around 54,000. And if we hold that, then some sort of bounce back for Nifty towards 24,900 and for Bank Nifty towards 55,500 can again happen. So, but that the stop loss levels of these two indices have to stay intact.
By the way, I just want to point out that note on oil marketing companies, the HSBC note, that Sud was alluding to, that's showing up in stock prices because the OMCs are doing really well today. BPCL 3% higher. The target there that HSBC put out was 420, so substantially higher compared to where the stock is right now. HPCL, their buy is with a target price of, I think, 520. So looking good on some of these OMCs. That's the HSBC view. But let's quickly get to your stocks, Shilpa as well as Sudarshan. Morning to both of you. Shilpa, what's on your stock list? What are you trading today?
I'll have 2 buys and 2 sell. The sell would be first one in SBI Life. SBI Life is trading around 1815, 1820 zones. So stop loss of 79, a stop loss of 1840 should work fine, and look for targets of 1790 to 1765. The other one would be a sell in Jubilant Food. Jubilant Food is facing resistance at 660, so that is a stop loss. And look for targets of 620 to 600 zones. The buy would be in ITC. ITC has just, closed above 400 zones, so your stop loss should be 395 and look for targets of 420. The other one would be a buy in auto, that is Eicher Motors. Eicher Motors has given a clean breakout on Tuesday and we've seen some stupendous move out there. So stock is definitely trading, heading towards 6,300, 6,350, on a positional basis.
Okay, all right, got it. And Sudarshan, what about your stock list for today?
It's a mixed bag. See, CDSL is an intraday short with a stop above 1520. Hind Liver is a buying opportunity with a stop under 2640. Balkrishna Industries again is an intraday short, stop above 2355, and Infi is a buy with a stop below 1500.
Okay, right. got that. Thanks very much, Shilpa, as well as Sudarshan for that. I just want to mention that Eicher, which was one of the stocks that Shilpa has called out, it's having a great start today, 2.5% higher, hitting yet another 52-week high. So really revved up. That's Eicher Motors.
A lot of the auto stocks as well, two-wheeler stocks. We have M&M doing well, Hero MotoCorp doing well, a bunch of them. Maruti as well, up around 1.5% after hitting record highs on Tuesday. Is it an inkling on consumption? Let's talk about consumption itself. Abneesh Roy joins in now. Abneesh, the FMCG sector has been outperforming. We've been calling out that, maybe the worst is behind and the best is ahead, especially in the second half. But in the very near future, I just wanted to understand from a second quarter standpoint, could there be a bit of a speed bump? And I say that because one, in the northern part of the country, there has been rains which have, wreaked havoc and obviously impacted consumption. And the second part, which could be a tailwind for the second half, which is lower GST rates, could actually be a problem for the near-term destocking because a lot of them would like to, get rid of their old stock and then purchase after the new GST regime comes by. So do you think the second quarter, to that extent, may not be as good as one is expecting and perhaps growth would be more back-ended than front-ended?
Yeah, thanks. Good morning and festival greetings. Good question, Mangalam. We do see that the gradual recovery should continue for most of our coverage names even in Q2. You're absolutely right. There can be some slight impact of the floods in some areas. In fact, some states are also seeing big deficit, right? So Bihar, for example, is seeing almost 25% deficit. That doesn't impact near term immediately, but yes, if that doesn't recover, there could be slight challenge in Bihar. Now, on the flip side, if you see, because Diwali is early this time, you will see that benefit for a lot of the consumption that in the last month of the Q2, September, there could be some benefits because of that. Because generally the 1.5 month of lead time is there, and that's why the benefit should be there in Q2, especially in the gift packs. Coming to a question on the inventory destocking, I think for FMCG now with so much of automation and real-time demand forecasting and ROI focus, I don't think the inventory destocking is that much of an issue versus some of the other durable categories, etc. So on an overall basis, if I have to summarize, we do expect recovery for Hindustan Unilever, Britannia, Bikaji, Nestle, etc. to continue. Slight challenge could be there for summer categories because as you rightly highlighted, the floods and there has been good rains in most parts. So I would say that the categories like the aerated drinks and even for Imami, there could be a slight challenge, but mostly it's a positive.
Okay, got it. So perhaps better times ahead. Abneesh, hi. And also what could perhaps fuel those better times is this GST regime that we're all awaiting, right? Tell us this. I heard this theory a couple of days back from a market commentator. Now, this gentleman was expecting companies to pocket a lot of the GST benefit by obviously, tinkering on the pricing. So net-net, your GST is down on that pack of biscuits, but then the company takes some pricing action to take some advantage of it. Is that something that you anticipate as well? And then therefore, just purely from a GST angle, which stocks would you keep on your radar?
A good question. Two parts. So we don't expect companies to really pocket anything because of two reasons. Anti-profiting clause is going to be strictly monitored. So I would expect that at 2 rupee, 5 rupee, 10 rupee grammage addition will happen. And that's why the volume uptick will further accelerate for 4 companies. I'll mention those 4 companies. And second, FMCG is a hyper-competitive category. So I don't think companies will look at that in any case if the anti-profiting clause was not there. Coming to your question, which are the 4 big beneficiaries? Bikaji, biggest beneficiary, 70% of the business is at 12%. I don't expect that India, the Bhujia category is seen as a junk category, and so can it go to 18%? I don't expect that. So 12, most likely it should move to 5. Imami, again, 60% of the business is at 12, Dabur 24, Nestle 27%. So these are the 4 big beneficiaries. And then we'll see a small benefit for some of the other companies also. So yes, we are positive on these 4 companies from a GST perspective. From an overall CEO change, HUL looks good. Britannia, double-digit likely growth in Q2, Q3. And even for Nestle, we expect growth recovery to continue.
So Bikaji, if you had to pick one pick for GST related, Bikaji, Abneesh, that's what you're saying, right?
Absolutely. We expect almost double-digit kind of volume growth. GST benefit is there. Early Diwali will help the sweets and the gift packs.
What about the things that you consume along with Bikaji? A lot of, the aerated beverages, the alcoholic beverages. Do you think that will be, impacted by the 40% sin tax that would come by?
Yes, from a aerated beverage, my sense is status quo will remain. Even for ITC and cigarette companies, our sense is the reclassification buckets could be their new name. But ultimately, I think even for cigarette, our sense is status quo or maybe slight increase, which shouldn't be a problem. Coming to liquor companies, I don't expect much of a GST change there. We'll prefer United Breweries only because of Maharashtra angle. Maharashtra angle clearly for spirit companies is a challenge.
Got it. Abneesh, more later. Thank you very much. Very useful, punchy conversation, and I think helpful for our viewers. I just want to quickly wrap up the stocks we covered through because of news flow related stuff, etc. And it'll come up. New AI unit, TCS in focus. Stocks will come up on your screen. It's down 1/3% of the pre-open. Block deal, Interglobe. Through the years, as the promoters sold stakes, stocks done well. This morning, of course, it's down about 3%. A deal with GE, HAL in focus, stocks absolutely flat. The severe floods in northern India, right? ICICI Lombard, New India Assurance, etc. come up. There's other stocks with news flow, United Breweries, Sami Hotels, which are in focus. New launches from Escorts Kubota, which will come up on your screen. There's a new joint venture, RVNL and Texmaco Rail, and those are up on your screen as well. So 1%, 0.5% higher. Let's just quickly get the 9-10 calls out of the way. Sudarshan, what do you have?
It's Unilever, buy Hind Unilever with a stop under 26.40.
Okay, Unilever is the call from Sudarshan this morning. Okay, I just want to shine the spotlight on Coforge now. Rima is here to tell us more. Rima, over to you.
Hi, good morning. So Motilal Oswal met the management of Coforge. They've come out with a note highlighting the key takeaways. Firstly, they're bullish on Coforge. They've got a buy rating, target price 20 to 40. They're saying the demand trends from the industry are still mixed, but it is favorable for companies which have a very outcome-driven solution like Coforge. So their win rates, they're winning about 40 to 45% win rate with their proactive proposals rather than the plain vanilla proposals. That said, this is helping the company with its large deal momentum. They're targeting 20 plus deals above the 20 million size in FY26. Already 5 have been closed so far. On margins, they maintain their target of 14% EBIT margins that the company says is adequate to fuel growth. And they also spoke about improving cash flow conversion going forward. Back to you.
Okay, all right, Rima, thanks very much for that. As we hit the opening bell, just also want to point out that a lot of the export-focused stocks, they've been anyway falling last couple of weeks in anticipation of this 50%. Now it's a reality, so you still have a tinge of red on a Gokuldas export or an Avanti feed, stocks like Trident, etc. So some of the exporters, the tough reality is now here.
Absolutely. And we will bring them up as the market starts to trade in just a bit from now. The first trades will be with you shortly. And I think we're a couple of seconds away. By the way, the other thing, of course, is the dollar rupee, right? I mean, it's already near an all-time low, the rupee that is, against the USD. And we'll see where this one goes. I mean, if there is, a disorderly kind of move, not today, but over a period of time, I mean, I'm sure the RBI, of course, is watching this very, very closely. So there's the equity bit, but there's also the fixed income rupee markets, etc. as well. We got the first rates coming up on our screens. What do we have? 24,695. So we are 0.17% lower, 0.26 lower, a 0.25% down on the bank Nifty, 54,255. Yeah, 0.25% lower there. Small cap index is down 2 or no, I think we'll just wait for the, it's down 0.33%. That's more like it. The mid-cap index, so it's basically like, Tuesday is open, it's all down 0.25%. And then, of course, towards the second half, the selling accelerated on Tuesday, the last session. We'll see what happens today. 80 lower on the Nifty now, 24,630. The sensex is down 300 points. The bank Nifty is down 270. That's about 0.5%. Small mid-cap index is flat, small-cap index is a little lower. Nifty heat map. So it's 20-odd stocks which are higher, and the rest of them are starting the day in the red. So that is the overall picture. Surbhi.
Okay, let's take a look at some of the stocks and news. By the way, Interglobe Aviation, 4% lower as those deals are getting done. 2.2% of the company's equity has changed hands. That's a stock in focus. It's down about 4% as of now. On the Nifty, it's 110 lower, so it's worse off than what the implied open was telling us. And now 24,600 is in question. So the pressure is here. Financials are actually leading the decline today. So Shriram Finance, HDFC Bank, ICICI Bank, Jio Financial, a lot of these stocks on the lower side. Kotak Mahindra Bank as well. Financials are lower, but then the other heavyweights are not really countering this downward pressure. Reliance itself is contributing to it. It's 0.5% lower. ITC, 0.5% lower. So you don't have any help coming in from these names. Even Bharti Airtel, again, 0.5% lower. So financials plus a couple of these heavyweights. On the upside, it's really the Indian consumer. That's where the hope really is. Whether you're talking two-wheelers, whether you're talking FMCG, Hero Moto, 1.5% up, Eternal, 1%, Eicher, 1%, Asian Paints, Lever, Bajaj Auto. It's really all hopes on the consumer. The Nifty down 130 this morning.
Well, even if you look at the broader markets, it's all about the consumers. We have a bunch of stocks which are doing well, but even as the financials are not doing particularly well, we have one which is outperforming. That's Edelweiss, because there was a large trade that took place. Sunil Singhania's fund bought stake out there. The stock ended about 7% higher on Tuesday's trading session. Right now is opened about 4% higher, so keep an eye out on Edelweiss. The other one where there was a large trade is also, Veranda. That's up around 1.5% at the open, though Edelweiss has given up its early gains, now sitting with a gain of just about 0.5%. Veranda is the other one, which is up around 1.5%. Interglobe Aviation, the trade has happened. 2.2% equity has changed hands. The block was for about 3.1% equity, so it remains to be seen whether the entire clean-out trade has happened or not, or has there been any slippage yet on that one, because the stock is still lower by about 4%, and it's lower than the large trade price as well. So we'll just keep an eye out on that one. The large trade has happened at 58.38, the stock at 58.13. Not all of the equity has been exchanged, or all of the expected equity has been exchanged. So let's see whether there is some more supply on Interglobe Aviation. Hatch & Agro is actually doing well, so that's another consumption theme that is coming by. Dairy play, so that's the one that is up around 2.5% at the open. Again, now up around 0.5%. Kitex Garments continues to see sell-off, so all these export-facing names. And this morning in particular, we have the oil and gas space. In particular, Mahanagar Gas and Petronet LNG, both of them are slightly higher. And then you have a long list of two-wheelers and retailers, the Indian consumer-focused names, which are doing well. So be it TVS Motor, Hero MotoCorp, Avenue Supermarts or Eicher, all of them marginally in the green.
Okay, 136 points lower now. So 24,576 is where the open is now settling. Just 2 minutes, 2.5 odd minutes into market open is what we are looking at. Just a few other names. By the way, it's out of the gates for now and early, but it looks like 2:1, a little over 2:1 declines to advances ratio. At this stage. So 1,500 stocks are lower and about 700 stocks are higher. I'm looking at all traded NSE stocks for now. Just Vikram Solar, I want to put it up. It was listed second day in the listed space, right? Listed on Tuesday, 4% higher on Vikram Solar. should come up on your screen. Hero Moto, I think we mentioned it, 1.5% higher. So yeah, it's coming up with decent sized volumes for now. Ola Electric is back up, back above 50, so it's 52 odd rupees now. Second largest volume-led gainer. It had this massive move from 40 odd bucks straight to about 55, and then sold off to about 48, all in a matter of about 10 days. Trying to come up, back up once again. Eternal is up 1%. DMart is up 1%. These are some of the biggest volume-led gainers. JTEK is up about 12%. So 145, and that's a very large move which is coming through on very large volumes as well. For this point in the day, look at that, almost 1 million shares, close to it now. E2E is up 2.5% as well, and I can go down the list, but volumes start to disappear very, very quickly beyond a point. So more, as I said, in a bit. Let's welcome in Gautam Shah, founder of Goldilocks Global Research. He's with us. Gautam, good to have you with us here. Thank you very much for your time. We had a decent move, Gautam, 24,300 to about 25,150 in 6-7 odd trading sessions. And do you think we go back to the lows that we saw, with the recent lows basically, which was the 8th of August? 24,330, those kind of view, not very far away, 200 points away. You think that's the first stop?
Good morning, Prashant. I think you need to widen the lens a little bit, because if you look at the last 1 year, the Nifty has generated zero return. I think last August we were around 25,000. This August we are at 25,000. And in this period, the market has handled a lot of adversities. It started with the FII selling, then issues around economy and consumption, then geopolitics, and now the Trump tariff. So actually, the market has handled a lot of adversities. And in this period, the one thing that has really protected us is really domestic liquidity and the fact that 27,000 crores is coming into the system every single month. Had the support of liquidity not been there, our markets would have been 15% lower than where we are right now. So I think this battle has played out over the last 1 year. I think it's really all about discounting. And I think with what's happened with the Trump tariff over the last few days, I think most of the discounting on the negative side is done with. I'm still not very negative about the markets from a medium-term, long-term perspective. I think the charts are still in good shape. But the sad part is India has become the poster boy underperformer after a long period of time. Because if you look at the world right now, US markets are at lifetime highs, European markets are doing well, China is at a 10-year high, markets like Singapore are at a 10-year high. And in this environment, you have India underperforming. So I think eventually India will have to join the party. So if you're somebody looking at markets over the next 6 to 12 months, I think this is an opportunity to buy. In terms of levels, 24,200 to 24,400, I think is a very important support area. Until the Nifty is above the same, I'm tempted to believe that this discounting of all the negative items will take place and the market will gradually move up. Because I don't think it can really get too much worse from here. And the GST push, I think, in some sense is a game changer, which I think the market realizes. So I think once we are trading above levels of 25,000, the ball will set rolling for the next phase on the upside.
Gautam, just a view on the market itself. You said that 24,200 is an important support, 24,200, 250. But thereafter, you also qualified it by saying that the market will only gradually move up. So you're obviously not expecting it to do a bazooka up move back to an all-time high. So it will just walk into the party as against stride into the party or dance into the party is what your belief is, right?
Well, over the last 5 years, we've seen enough bazooka up moves. And I think people have got spoiled in believing that every single time the market will run up as if there is no tomorrow. But let's not forget, we are still one of the most expensive markets in the world. And there are concerns around the economy, which is the reason why the Nifty itself has not been able to build up on the gains. But I think from a near-term perspective, over the next 2 to 6 weeks, I think the market will aimlessly stay in a range. It will be volatile. It will give you periods of greed. It will give you periods of fear. I don't think it will break out or break down. So my working range is 24,200 to 25,000. In this period, the Nifty is going to just stay stuck. But eventually, I think there are higher chances of a breakout on the upside. And as we've been maintaining all along, I think this is a stock-specific market. Forget the Nifty, forget the index. Look at pockets in the mid caps and small caps. That's where the big opportunity is. And that's where outperformance is going to be over the next 6 to 12 months.
Absolutely. You've been saying that while you've retained a positive stance in the market, Gautam. You've always been maintaining, I think right from April onwards, this is going to be a more stock-specific market. Before we talk about the sectors and the leadership, because there's absolutely no leadership in the Indian market, that's the problem, right? I mean, now everybody's pinning their hopes on consumer and FMCG. But before we talk about sectors, just to complete that that correlation analysis, I mean, if there's one thing that this year has taught us is that correlation of the Indian market with the US market, that's been broken. But is that just a phase, or is there something longer term structurally that you see changing when you look at bigger charts like, whether it's the dollar, whether you're looking at the 10-year bond yield, US bond yield, or even US equities themselves? Is there a bigger message out there than just a small period of underperformance here in India?
Well, I hope there is no bigger message here, because I think over the last 20 years, India and US have pretty much moved hand in hand. We've seen this all along. You can put both charts together and you will see tops there lead to tops here, bottoms there lead to bottoms here. It's just in the last 3.5 months that India has gone the other way. But usually they meet, and I think they will meet on the way up. But the bigger problem which I have right now is I think China is probably the next big opportunity with what it's done in the last 2 months. And there is a very clear case of possibly India underperformance and China outperformance over a period of time. That doesn't mean that India will not deliver returns. It's just that it might not deliver relative returns in comparison to China. So India-China, I think equation has changed quite a bit. And I think that's a new mega trend over the next couple of years. But US and India, I think, will move hand in hand, because you can't have a global equity market bull run, which is what we are seeing right now, and India not participating. We are discounting the negatives. Hopefully that will be done with over the next couple of weeks. And then we will be back joining the rest of the world.
All right, we take that point. Just hold on, Gautam, as we ask you about your market sectoral views right now, because just as we speak, there's been a sharp downtick in the frontline indices. The Nifty is now just around the 24,540 mark. At one point was threatening to break that 24,500 mark as well. And it's across the board selling. So you have three large weights on the index. We have the Nifty Bank, which is down by about 0.8% after underperforming for a while on that one. Then you have Reliance, which is not doing too well. And now today, we're seeing a fresh bout of selling in the IT pack as well. So the IT index is down about 1.5%. Remember, on Monday's trading session, the IT index actually supported the frontline index, and as a result of which the Nifty was up around 100 points. But the last two trading sessions, the IT pack also has begun to see some sell-off. So the Nifty now, for all practical purposes, is also below the level from which it started to rally after the Independence Day speech on the Prime Minister. So the Nifty before the Independence Day speech of the Prime Minister was closer to 24,560, 24,600 thereabouts. Then the speech came in. The street liked what was said, especially on account of consumption uptick. In the next few days, we saw a rally all the way up to 25,134 thereabouts. And now we're back to levels below that. So we've erased all those gains.
No, absolutely. And it's important you point that out, Mangalam, because if we talk about the entire compression the market has seen in the last 3.5 odd months, now we're barely 200 points away from the lowest point of this consolidation patch. The low the market hit, just to reiterate the levels, was 24,337. And this was earlier in August, to be specific. The low that we hit was the 8th of August, 24,337. And we are exactly 200 points away from challenging that low. So it is tough. It's a tough morning of trade. And it's been a tough reaction to those 50% tariffs as well. Just to reiterate the range that you put out for the Nifty, Gautam, you said that your working range in the near term is 24,200 to 25,000. Is that right?
Yes, that's the band in which I think the Nifty will just try to find its footing. And 24,200, I think, is a very important support number for me as a technician who looks at the weekly and the monthly charts. But I think the bigger point is, don't look at this market day to day or the next 2 to 3 weeks. I think it's very messy. It's very noisy. If you take a more 6-month to 12-month perspective, I think there are some amazing opportunities, with a lot of margin of safety and risk reward. So, I mean, if your lens is 6 to 12 months, the market is a buy at today's prices.
All right. And, while this range continues, what are your calls on the sectors? Which of the sectors appears a little more oversold and perhaps as a result of which a better investing opportunity? And which are the sectors where you believe that, there is not a lot of upside left?
Well, I think the problem has been leadership, as you all alluded to. I think because IT has been in a very difficult space, Reliance has gone nowhere, and the bank Nifty has seen quite a big hit in the last 2 weeks. When the three big pockets of the market don't do well, it's not possible for the Nifty to build up on the gains. But I think eventually bank Nifty and the financial services sector will have to carry the market because valuations are comfortable, flows are still coming in, and the top banks are still very well placed, and they really don't have too much impact of what's happening in terms of foreign policy. So given all of that, I think bank Nifty somewhere between 53,500 to 54,000, I think is an opportunity. And we do like the entire NBFC space, and I think they can definitely be bought into right now. The two other sectors that we like are auto and metals. Auto clearly spurred by the recent GST news flow. It's visible on the charts, and I think a 15% move on the index is quite likely, followed by metals, which hasn't done so badly in the last 2.5 months, despite all the negative talk around it fundamentally. I think metals is also a big opportunity. But as I mentioned earlier, it's a stock pickers market. So you go mid caps, small caps, there are various pockets there, power, infrastructure, fertilizer, where I think the opportunities are immense.
Specifically, what are some of these consumer company charts telling you, Gautam? Let's talk, let's say, two-wheelers or even four-wheelers. Suddenly there's some sign of life, even in a stock like Maruti. And then FMCG. Now, FMCG, not sure if it's a hope trade or if the charts are indicating that there is some bottom formation, whether they have the energy building up for a more substantial up move.
Well, auto, we are quite convinced that this is a genuine move, and I think it's going to lead to a lot more upside. I think the top 4 or 5 names, we like all of them. In fact, we covered officially a couple of them at Goldilocks recently, and I think the index is likely to appreciate 15%. And it's very clear, I think the GST push has triggered that breakout on the chart, and it is here to stay. So we are seeing relative strength. But FMCG, I think, is still a problem because it's the mirror of the economy, and the FMCG index has been underperforming since October last year. So it's been 10 months of underperformance. And the problem is they're all still richly valued because we sold them as the India story. All kinds of valuations were justified last year, and now people are facing the heat because they are underperforming. I still don't see an opportunity there. I would stay away. I'd rather go with services. That's probably the reason an Indian Hotels and Eternal is doing where it is. Not a recommendation, just an observation. Services consumption is probably for me a bigger opportunity than product consumption.
That's an interesting one, services consumption versus product consumption. We've seen that in a lot of the hospitality names and even Interglobe. Speaking of Interglobe, by the way, we understand that the deal size has been curtailed. So the earlier large trade that took place, which we said was 2.2% and not the entire size of the purported 3.1%, was because the deal size itself has been curtailed. We'll obviously get Vivek to talk a little more about that, the reasons, etc. for it. The stock, however, not particularly happy with that curtailment of deal size, and it's down about 4.5%, so below that 5,800 mark for that stock as well. Gautam, you said there are a lot of opportunities in stocks, so let's get very direct. Specifically, what are the 3 stocks that you like?
Well, I don't want to speak about specific stocks, but there are certain themes which we like over the next couple of years, and I think today is a great opportunity to buy into them. Possibly power, if you have to play the India story. Power, infrastructure, and clean energy, and hotels and travel. These are 4 themes that we really like. And the moment the market stabilizes, I feel that these 4 themes can deliver supernormal returns. Power is a no-brainer. Infrastructure is a no-brainer. Clean energy, I think we've done a lot of work around it. And I was at a couple of events, and I think the thesis is very clear that the world and India is moving towards clean energy. And a lot of stocks are being ignored right now. But again, if your lens is 2.5 years, that's an opportunity. And travel and hotels, I mean, the winner takes it all. Look at what Indigo is where it is. Look at where Indian Hotels is where it is. So I think this is again a mega theme which I think will play out. Valuations are comfortable, and I think these companies enjoy great market share, and it's only going to get better and better for them over the next few years.
There's a lot of downside pressure on stocks now on the large cap screen and on the mid cap screen. So today's fall hasn't spared either large, mid, small, nothing. It's all down, and financials are taking the market lower very, very clearly. So if you look at the Nifty and this 200-point drop, then a lot of it is finance. Shriram Finance, HDFC Bank, Jio, and so on and so forth. But the problem is there is no counterweight either. Stocks like Reliance, Bharti, everything on the downside.
This is banks and financials. That's what I was talking about. And by the way, it's not now. It's down 1%, but it's hugely underperformed.
Yeah.
So while the Nifty is still not at the lows at. Nifty, by the way, had a good retracement, 61.8% of the entire fall. The Nifty retraced. The Nifty Bank did not even retrace 38%. So there was no real momentum, and that's the economy-facing part of the market, which is, relatively speaking, underperformed in a big way. I don't know if Gautam has a view on this. Gautam? Nifty Bank?
Yeah, as I said, I mean, if you look at it over the last couple of months, it's been an underperformer, no doubt about it. But can it really collapse from here? Can it get into a sort of a bear market? I don't think so. I think till 2 weeks back, you had SDFC Bank at lifetime highs, SBI doing well, Bajaj Finance holding out really well. And these are companies with solid earnings and nothing to do with what's happening with the US. So I wouldn't be too negative. I know that it's high beta and therefore it's correcting. But as I said earlier, somewhere around 53,500 is where your most important support is, and that's where the 200 exponential moving average is. So risk reward from a more 3 to 6 month perspective for financial services right now is in favor.
Okay, all right, we'll take that. So keep the longer term lens on, not the near term noise. That's the advice from Gautam, and in all probability you'll end up making money. And these are the times when the market really tests our patience and our nerves. So important advice. We'll keep it in mind, Gautam. Thank you very much for joining in. Right now, it is a morning on the downside, where the Nifty is now struggling to hold on to 24,500, very close to going back to 3-month lows. Let's see how it plays out. But for the time being, we're putting the spotlight again on a corporate conversation. Texmaco Rail has formed a joint venture with RVNL. This is a 49-51 JV, where Texmaco Rail's share is going to be 49%. And this JV is going to focus on manufacturing and maintenance of freight and passenger rolling stock. Joining in to talk about this is Sudipta Mukherjee, Managing Director at Texmaco Rail and Engineering. Mr. Mukherjee, thank you so much for joining in. We also have with us Manish Agarwal, Principal Executive Director, Mechanical at RVNL. Mr. Agarwal, welcome to the conversation. Thank you both for being with us. So, gentlemen, we really want to understand this. I mean, I think the equity component that Texmaco has put in is less than 5 crore. It's not about the equity you've put in right now, but really what is the purpose? And that's what we want to highlight on. So let's put 3 points up for our viewers. We want to understand the synergies from this joint venture, the growth opportunities that come by it, and how this strategic partnership can perhaps enhance and further value creation, and how confident the companies are of normalizing the execution and the improvement of wheel set availability. So let's start by first understanding the JV itself, the thought process, the rationale. Independently, both of you do work for the railways. Mr. Mukherjee, Texmaco anyway has been producing rolling stock, right? So why the JV? What does it bring to the table? And what happens to the business that you will bid for independently? And what will be bid jointly through this structure?
Good morning. Thank you to start with a very thought-provoking question, which will set the ball rolling for the whole discussion. See, you have to run it through from the context that the infrastructure related story or the India growth story, that is one which is a big context. And of course, globally also, we find the same similar momentum in certain geographies in the present situation, that nobody is able to ignore the very part of infrastructure and making it more capable for the geographies. So we both play a significant role in our own capability in the domain. But when you talk about scale and reaching to newer markets, so this JV is kind of a association which will hold a tremendous potential to unleash further new markets in terms of having more capability and putting it forward for the new India. And that's why we want to define it that it's a very unique public-private initiative. And
absolutely. Sir, but some more specifics will help, sir. Shareholders need to understand what the rationale is. And again, I go back to that central point. This JV, while it looks at opportunities in overseas markets as well, I'm sure it will also bid for Indian railway opportunities. So then, how do you split it up? I mean, what business will be bid through the JV, and what happens to the independent work that you're doing, the rolling stock that you're producing for the railways?
So I come to the last part of the question. There is a non-compete. Nobody, I mean, we are not going to enter into the domain of RBNL, or RBNL is going to enter into the domain of Texmaco. So far, the core businesses are concerned. This is more related to the areas which is beyond That's what today we are doing. Per se, from the perspective of Texmaco, there are certain turnkey projects which are coming up, including the maintenance of the rolling stock and also, when we talk about rolling stock, it's not only freight wagons, it is the passenger mobility and also the locomotives. So those are the areas where we want to work together from this JV in terms of the whole life cycle of the product, right from manufacturing to service and maintenance. This is one of the key factor in the JV which we are looking forward to. And Texmaco brings the manufacturing expertise in and around what RVNL is doing. And we together, we believe that we will be able to execute and look forward to such such kind of opportunity.
Right. Mr. Agarwal, let's ask you and put it another way. Have you set yourself a revenue target for this joint venture and a timeline by which you would achieve that revenue?
Very good morning to all the viewers of your esteemed channel. See, this JV partnership has been envisaged to leverage the core strength of both the companies. Rail Vikas Nigam Limited, as you know, has been in the forefront of providing the railway infrastructure, and now recently we have branched out to other areas as well. Coming to the revenue part, our initial target is about 5,000 crores, but we have not spelled a very definitive timeline because the company is still in the formative stage. We are looking at various areas, as mentioned by Mr. Mukherjee also, which includes locomotives and rolling stock consisting of both freight as well as the passenger mobility. So we are quite hopeful that once the ball starts rolling, we will have adequate business under our belt to gradually transform and increase our revenue.
5,000 crores is what you are targeting from this joint venture. You haven't set yourself a specific timeline, but I'm sure there is a rough range that you would have, right? Is it 3 to 5 years, 5 to 7 years? You can give us a broader range. The street will be happy with that.
Yes, initially we are targeting a 3-year period because there are certain low-hanging fruits which we feel that can be accessed and can be taken care of quite quickly. We have certain opportunities in the African continent. As far as RVNL is concerned, we are looking at this JV, a major part of it coming from the overseas market. And Africa is one country where we find there are a lot of opportunities. So in the next 3 years, we are looking towards fulfilling these requirements.
Mr. Mukherjee, I'm looking at some estimates on the street in terms of wagon procurement from the Indian Railways for this year. It dipped quite a bit last year. In FY25, I think it was only 9,400 wagons ordered. One estimate suggests that this year it could be as much as 38,000 wagons that the Railways looks at procuring. So when you talk of an opportunity like this, will you be addressing the Indian Railways opportunity independently through Texmaco Rail, or will it be via the JV now going forward?
It will be independently through Texmaco Rail. It has nothing to do with the JV.
Okay.
And JV is, as I have mentioned, it is beyond whatever we are doing today. It is for newer markets, newer reach, and new combination of business.
All right, Sudipta, since we have you with us, let's tell us a little about execution right now. Wheelset availability was a bit of a problem. We spoke with Titagar last week as well. They did say that it continues to be a bit of an execution problem. Would you concur with that? And what are you doing to improve that? What's your execution timeline for the year likely to be? X of this JV, obviously.
So for us, we would like to mention clearly that for wheel sets, we do not want to change the guidance. We had done a top line of 5,100 crores last year, and we are confident that we will do better in the top line as well as the bottom line. And regarding to the wheel thing, it is only limited to the production of the railway wagons, which is being ordered by the Indian Railways. But although there was a crisis in between, but now it has improved a lot. A right combination of Indian Railway orders and the private and export orders will be handy for us in the way forward to make successful our plan.
All right. So I was just saying, no problem in terms of wheelset availability. You are expecting revenue to grow this year and profitability to grow as well. And Manish, on RVNL, first quarter margins were at a record low, 1.5%. Do you expect them to improve? What's your overall guidance for this year, X of this JV?
Well, the margins had dipped, no doubt about it, because as you know that earlier, primarily we were handling railway projects only, in that too on nomination basis. But as per policy shift, we are now bidding in open market and securing projects. So this particular procedure has started in the last 1.5 to 2 years, and the projects that we have now secured, they are gradually maturing, and we are certain that in the coming times, the margin and the revenue are going to improve.
So just one final question, for Mr. Agrawal. You said that the revenue potential from this JV could be 5,000 crores. By when will you be coming up with the first bids, when you identify opportunities and projects? Should we expect it in 2, 3, 4 months, longer than that? When do we see action on the JV?
Yes, after signing of the JV yesterday, now we will be in the process of completing the incorporation of the new company. And at the same time, we, as I mentioned earlier also, that we are scouting the overseas market initially to get hold of certain projects, particularly in the African continent. And we are sure that in the coming 3 to 6 months, our bids and our forays into this area will start.
Okay, all right. So perhaps some more revenue opportunities to start off with from Africa in the next 3 to 6 months for both of your companies. Thank you very much for joining in and giving us some perspective on this new joint venture, as well as, of course, the existing business. That's Texmaco Rail and RVNL. Well, with that, let's head back to Sudarshan. Sudarshan's been, of course, looking out at these indigo blocks. And by the way, as we toss it to Sudarshan, some good news for the Nifty as well, from a drop of over 200 points. And there's some stability that's coming in. And the Nifty has managed to at least limit its morning losses for what it's worth, at least for now. But Sud, tell us more about those indigo deals.
So two things. First, block deal that has happened, the size is less than what we expected, but the price at which it happened is higher than the floor price that was expected. So what has happened? Block deal has happened for 2.2% equity, and that has happened at rupees 5,838 per share, and that is worth rupees 5,030 crore. Now, sources say that block deal size has been reduced from earlier size of 3.1% that we had from the excess that we had to the term sheet. That indicated that block deal size was expected of 3.1% equity. But as of now, the block deal has happened for 2.2% equity. And so it's been reduced. Earlier floor price was rupees 5,800 per share and total size was rupees 7,027 crore. So we'll have to wait and watch if there is another tranche of block deal. But as of now, the size has been reduced and it has happened for 2.2% equity instead of 3.1%.
Okay. All right. Got it, Sudarshan. Thanks very much for that. With that, I think we have to slip into a very quick break. Come back on the other side. We'll have lots more lined up for you, including a conversation with the management of BLS International. They'll be discussing this 2,000 crore rupee order that they have won from UIDAI.
Welcome back. One of the stocks that gained on Tuesday's trading session in an otherwise wobbly market was BLS International Services. And the reason for that was pretty clear. They received a near 2,000 crore order coming in from work order coming in from the Unique Identification Authority of India, better known as UIDAI, for Aadhaar centers. Shikhar Agarwal, the Joint Managing Director of BLS International, joins us, and obviously the conversation will be focused on three important points. The first one, the company's execution plans, the volume risks under UIDAI order. What's the outlook on the margin post this order? And finally, the visa business recovery and the growth visibility on the non-UIDAI or government businesses for the company as well. So let's talk about all of that. Shikhar, thank you so much for joining in. First up, this 2,055 crore order. If you could give us a sense on for how many Aadhaar centers is this, for how many years is this, how will the revenue recognition on this be, and is this volume based? What are the kind of margins here?
BLS International is very proud to have won this landmark deal, which is the Aadhaar Seva Kendra, which is the golden project of UIDAI, wherein we will have to set up around 300 offices across different parts of the country, and to enable Aadhaar enrollment, biometric enrollment, renewals, update, etc. These are exclusive centers being set up by UIDAI in India. And the reach is going to be phenomenal this time. Under this contract, we have to maintain Aadhaar Seva Kendras, operate, set up infrastructure, etc. We have to employ around 3,000 people. And the revenue potential from this contract is to start with more than 2,000 crores in the next 6 years.
Over the next 6 years. So this is a fixed revenue, or is it basis the volume that you generate on these Aadhaar Seva Kendras?
Last year itself in India, my estimate is around 17 crore Aadhaar transactions happened. This model is based on per transaction as our business model. So we expect the number of transactions to be generated to achieve 2,000 crores of revenue over the next 6 years. It's a per transaction model, and the margins that are expected are around 20% from this entire contract.
And what are the volumes that you're expecting over the next 6 years that gets you to this 2,055 crore revenue?
Volumes, we are not exactly sure. We know the revenue that we will generate. Last year in India, as I said, around 17 crore transactions happened. I think upwards of around 2 crore transactions every year is something that we are expecting from this contract.
Yeah, but I guess it's a bit of straight math as well, right? If you're saying it's a per transaction model, then you need to be confident of an X amount of volume to generate this 2,000 odd crores over the next 6 years. Which brings me to the question of competition, Shikhar. Now, how does it work? I mean, what are the geographies that are being allocated to you? And you need to be in very unique geographies as well, right? Because if there are multiple Aadhaar Seva Kendras at banks or other, post offices, etc., then that much more competition for your Kendra. And therefore, the chances of lower footfalls. So, how are you mapping this out?
Correct. So these are exclusive centers being set up by UIDAI. Currently, they had 70 centers across India. Now they're taking it to 300 centers that we will set up in India. And these are exclusive centers by UIDAI. So these are the only centers by UIDAI in the entire country. And this is the minimum volume that we will generate from this contract as per the tender that we have filed with the government. But as I said, the volume expected could be much larger as the number of transactions grow in the next few years and the change in regulations come. That is why, I feel even the contract value can even grow further.
Got it. So basically what you're saying, these are newer centers, unique centers in that case, and then within a certain radius, perhaps, I don't know if you have the number, there will not be another Aadhaar Seva Kendra. So no issues there.
Correct.
You mentioned 20% margin on this kind of a contract. So does that kick in from day one itself, or is it a 20% level you get to it as the scale and the volumes grow?
Definitely, this project is a big project, so from day one, they give us time also between 6 months to 1 year to set up all these kendras across different parts of the country. So definitely, from day one, as the volume grows, as the volume starts coming, the margins will also start coming in. So at least in 1 to 2 years horizon, definitely the margin should come in.
The other thing is that, what is the penetration of Aadhaar right now in the country? If you could give us a sense on, because in the 70 centers that are already there, a large part of the country has Aadhaar cards. And this is not something that you make again and again like a Schengen visa. So with the 300 centers that you have, are those areas already penetrated with Aadhaar? On what basis is your volume estimate? It can't just be because last year it was 17 crore, this year will be that much, because those 17 crore are made and done with.
No, but every year there is updates of Aadhaar, there is new enrollments, there is change in birth name, etc. So these transactions are historically growing, So every year we see, big uptake in transactions, and that is how we have thus won this contract on minimum guarantee of volume. And these are exclusive centers by the UIDI, So this is probably like the Passport Seva Kendra, wherein they have exclusive centers to renew passports. This is by the UIDI to exclusive centers to renew Aadhars.
And you said minimum guarantee. So the government, irrespective, the minimum guarantee that you have is of 2,055 crores over the next 6 years, right? Anything over and above that would be positive.
Correct,
a bonus.
Correct. So this is the revenue that is expected to generate over the next 6 years. On the basis of this, we will be doing our entire investment, etc. And as the volume grows, this project has a scope of even increase in the revenue.
All right. And your non-Aadhaar business, the non-government services business, the visa business, if you could give us a sense on what's up next out there, any new centers coming in, any new countries opening up for your services as visa centers. What's your outlook on that one?
Yes. So see, if you see our first quarter revenue, we achieved 710 crores revenue and 180 crores of profit, which was a 50% growth compared to similar quarter last year. So definitely, a lot of new contracts that we won over the last 1.5 years, we have deployed. As I said, there is multiple tenders that we are bidding for. We are continuously winning tenders. Having said this, Aadhar Seva Kendra 2,000 crore tender also that we have recently won. There are multiple tenders in international geography that we are eyeing for. So definitely we feel that with the market penetration and our global reach now, we are continuing to maintain our growth momentum.
Right. Shikhar, just two clarifications. One, to Mangalam's question, new Aadhaar changes made, you get paid all the same. There's no difference.
See, I don't...
To make a card from scratch or to sort of effect any changes in terms of updation, etc., there's no, BLS gets paid the same. There's
Correct. Our service fee is, as you know, our model is per transaction based. Even our visa counselor services, even in this contract, it is per transaction based.
Okay.
For us, our service charge remains the same.
Okay, fair enough. One more question from my side. We are seeing a sharp reduction in, for example, student arrivals, etc., in the US. We'll have to see. We'll have to track how this kind of goes. You don't process any visas in any country, I think, for the US, but you do so for many European countries, etc.
No, we also work for the US government in many countries around different parts of the world with our partner. So GDIT is an American company. So we have partnered with them and we are delivering US visa services from multiple countries in different parts of the world, but not from India.
Oh, I see. BLS directly does not, but through your partner you do.
We are the delivery partner as this happens. So we are delivering US visa services in multiple countries in different parts of the world.
Okay. And in your numbers, how does it show the US as a proportion?
See, we started this business only in September last year, wherein we scaled up to many countries. So definitely the volumes are growing. I need to check exactly if there's a big change in volume, but for us, we have not seen any big change in numbers in the countries from where we are operating.
Okay. All right. Shikhar, one last question. Just to get back to the margin profile. Now, your Aadhaar business is going to be a 20% margin. The rest of the business so far, in good quarters, you've gone to as high as 30% margin as well, right? So give us an outlook. 1 year down the line, when your Aadhaar business is fully functional, at a blended company margin level, what will the profile be? Will it be slightly margin dilutive?
See, if you see our margins in visa business, as you said, it's upwards. If we do segment reporting now, so our visa business margins are upwards of 30-35%. If you see a consolidated blended margin, last quarter was around 27-28%. So definitely blended margins will be little less. I need to check the exact numbers, but visa business margins will continue to remain steady. But definitely there will be a big jump in revenue. This 2,000 crores of revenue we will be getting in the next 6 years. Our reach will increase. So definitely blended margins, we need to check, but this business is at 20% EBITDA margin. So there will be little less blended margins, but visa business margins will continue to remain steady.
Take that point. Thank you so much, Shikhar, for joining in and giving us your views. Wish you good luck with this and more Aadhaar to everyone, all the centers that you open in as well. I don't know about your business or not, but you bear good news for the market. The Nifty is now back closer to that 24,600 mark. So there's been a sharp recovery from the lows. It's been led by the banking names. It's also been led by increased purchase in the consumption names. So pull up something like a Titan. That's moved to the high point of trade. A recovery of 1.5% from the lows. L&T, a fair weight on the index, also has moved higher as we speak. And we are seeing some traction in names like Asian Paints and some of these financials. So we have Bajaj Finserv and Bajaj Financial, which is up close to around 1% from the lows, though some bit of profit taking on a name like HUL, which is currently at the low point of trade. So there's a recovery of almost 330 points on the mid-cap index, over 500 points on the Nifty Bank, which is now sitting with a cut of just 300 points, and the Nifty sitting with a cut of just about 100 points. Perfect time to get Vinay Rajani, the senior technical and derivative analyst at HDFC Securities, joining in. Vinay, a lot of calls written yesterday. Now the Nifty is recovering from the lows. The put call ratio too had moved to a lower range of 0.7. Do you sense any recovery coming in, or do you believe that this recovery that we've seen from the lows will be sold into once again?
Yeah, good morning. So yes, definitely derivative data is suggesting some sort of oversold scenario for the markets, and for the entire series, Nifty has underperformed the emerging as well as Asian markets. And we have seen already 650 points correction from the recent high of 25,153. So definitely positional charts have turned weak. Nifty is now trading below 2050, and it has also breached the 100 days EMA. So definitely the positional setup has turned weak. Previously, we were expecting 24,800 to act as a strong support, but now that has been breached, and now that can act as a strong resistance. So positionally, we believe that unless we see a decisive close above 24,800, one should remain cautious and take a bearish stance, and intraday pullbacks can be utilized to go short again. So 24,800 should be the stop loss in short position. As far as support is concerned, we believe that previous swing low of 24,340, around that level, there is a strong support. So definitely there could be limited downside positionally, but as of now, it looks like that going by the entire month, today's expiry could remain under pressure only, and intraday rally, I think, will find supply at higher level. Overall, 24,340 is a strong support, and 24,800 is a strong resistance for the Nifty.
Okay, all right. Also, just run us through your stock calls. Any particular trades for the morning?
Yeah, sure. So IT stocks today showing some weakness. So there is a fresh breakdown in some of the IT stocks like HCL Tech, which is after some pullback, it has again resumed its downtrend. So HCL Tech September future, I would recommend to go short. Around 1466, HCL Tech September future can be shorted. And stop loss, I would suggest around 1486. On the downside, I'm expecting a target of 1435. On the long side, I would take a long bet on in the auto space, Minda. So Minda has done exceptionally well and has remained resilient in the downfall of the market. So Minda is looking strong technically. Around 12891 can go long. I would suggest a short-term stop loss around 1270. On the upside, we can expect a target of 1325. So Minda on the long side and HCL Tech on the short side.
All right, we'll leave it there. Vinay, thanks very much for joining us. Good getting that. We'll take a break. Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services, on the other side to talk about the impact or the lack of it on earnings here in India because of US tariffs. Stay tuned. Welcome back. As promised, let's now go across to Ramdev Agarwal, Chairman of Motilal Oswal Financial Services, who's joining us. Ramdevji, great to have you with us in the program. Can I see a lion behind you, or is that a cheetah? Because you are coming to us live from Kenya, I believe.
Yeah, it's a beautiful weather here, and a lot of animals all around, and I think there is a lot of action in Mumbai.
Yeah, but it's.
I think the
action is.
they would want the animal to be a bull and not a lion or a cheetah or
Just
anything
need more
else.
bulls in Mumbai.
More bulls behind Ramdev than just
I think
lions.
The biggest bull is in
He's
Kenya.
in Kenya right now, one of the biggest Indian bulls. So yeah, we had to get a bit of Ramdev ji back on the screen because the market needed to hear the bullish voice.
But there is Ramdev ji, thanks for joining us. I know you're on a break.
Yeah.
But how do you assess this entire situation? The tariffs have taken effect, 50%. Obviously, this 50% cannot be permanent. This 25% additional will go away. We don't know when, though, right? Timelines are hazy.
Yeah.
So your first thoughts?
Yeah. So actually, these are historical moments in this global relationships and geopolitics, economy, whatever. It will be remembered for a very long time. And since these are passing moments, deals will happen. I mean, there are two big countries that it is impossible that deals will not happen. Deal will happen. On what terms, when? There is some kind of a flux. There is an uncertainty. So, of course, markets don't like uncertainty, and hence, somewhat there is a kind of bit of uncertainty and sell-off in the marketplace. But my sense is, it has the only way to approach this subject is to figure out at our end what could be the impact on the earnings. Will there be a lasting impact? Will it be a deep impact? How big it will be? And then I spoke to my research head and all. They said, so that at this juncture, if the deals happen in next 10, 15 days, 1 month, 2 months, they don't see any impact in the acceleration in the earnings. See, right now what is happening is that we had a 4 or 5 quarters of slowdown in the earnings in India. And I think we are just about, this quarter itself was 2-3% better. And as the fiscal, monetary, and the arsenal of reforms which are going to be unleashed in next few quarters, my sense is we are going to see earnings acceleration. And also I'm presuming that some sort of deal will be in place in the weeks ahead. So I would not, in fact, I would use this opportunity wherever I was left with some kind of a cash or liquidity. I would definitely use this opportunity to buy some of the stocks which are corrected at this juncture.
Right. Ramdev, 2 questions. One, you said if it happens on the outside, it's a 2-month kind of window?
I have no idea.
No. I'm not asking when it will happen. I'm saying that beyond, because if it stretches for too long, then obviously you'll have to reassess. But at this stage, if it is that the feedback, or it was a general comment? I heard 2 months on the outside.
No. I have no timeline, but I think both sides are in a hurry, and it will happen in the sense that it might be a few weeks or maybe a month or 2. So in the overall scheme of investing, I would say this could be an opportunity, because if by chance market corrects by 4-5% more from here, because of what our headlines come, because the headlines are what drives, so there will be few days when the headlines will be like this, and there will be, kind of talks from both sides. Headlines will be coming from both sides, and there will be reconciliatory, headlines. And it is happening in the backdrop of global bull market across in equities.
Ramdev, I just want to and we'll talk about that as well. But is there your team has looked at direct impact, right? But is there an indirect impact as well? A lot of the impact lies outside the listed space, but then that feeds through in terms of income hit, job losses, income hit, consumption impact, and then loans going bad, etc. as well. Is that something which, because these are very labor-intensive sectors? Go on, sir.
Prashant, you just can't. You can't just believe that there won't be any deal. I mean, I'm not taking a situation that there won't be.
Okay, I think we are losing the line
there will be
a little bit.
How good of that, whether it remains at 25% or whether it somewhere kind of thing comes. So we have to assess only when the final.
I think that's a bit of a scratchy line.
Let's do one thing.
We'll try and connect him. So if you can hear us, I'll try this one time, and then if not, we'll reconnect. So your point is well taken, that you believe there will be a deal. Now it could be 1 to 2 months. If it is within 2 months, then maybe no real impact on the earnings acceleration and recovery that the market is currently penciling in. So my question to you is on the kind of money, because the only thing that's really helped the market in the last 8-9 months is domestic liquidity and firepower, right? It's been very steady with mutual funds. They still give us positive feedback when we ask them. But when you talk about HNIs and the non-retail, non-institutional money, what is that money thinking? Do you see a lot of money gushing in if there is another 2-3% correction?
Let's do one thing. Let's disconnect that line and connect it again. Maybe we get a better shot at hearing and seeing Ramdevji clearly. Let's do that. Why don't we can we take a break and come back? Yeah, let's do that. Let's take a break. We are back with Ramdev Agarwal on the other side.
So far, the recovery on the market has held. The Nifty is still holding with cuts, but they are a lot lesser than what we saw, say, about 30 minutes ago. So keep an eye out on a couple of these two-wheeler names. They've been doing well. Now they continue to do well. Hero MotoCorp, that outperformed earlier, then saw a bit of a dip, and that dip has been bought into, currently at the high point of trade for that stock. Eternal is doing well, but the largest contributor on the way up for the index has to be Reliance. It's up around 1% from the low, still marginally in the red. We have the all-important annual general meeting for Reliance tomorrow as well. We are in conversation with Ramdev Agarwal. We have him on a better line, hopefully now, from Kenya. Ramdevji, thank you so much once again. As Prashant was earlier asking, that there is the direct impact of these tariffs. And secondly, then there is a second-order impact. Now, on the second-order impact, you said that you refuse to believe that there won't be a trade deal. Even if there is a trade deal that happens, it is likely to be somewhere in the middle of the range, right? From 50 to, say, even if it settles, say, around 20, 25%, whatever it is, it'll still be higher than what we had earlier accounted for. What would the second order impact of that be, according to you? Because, there is textiles, gems, jewelry, and shrimp feed, etc., fairly labor-intensive sectors. Do you think there could be job losses here? There could be impact on consumption because of something like this?
It is too early to guess on the second order impact and things like that. Once the deal is in place, then we'll start assessing whether what will be the impact, because trade has its own way. I mean, I was talking to some gents jewelry guys. They're saying that, in fact, their claim is that they won't be impacted at all. So now you have to figure out how exactly they are going to do it. So I think the trade has its own way. The impact, I was talking to somebody yesterday, and he said, if it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade-related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms. And so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at isolated things, let's look at it, what will be the impact on the earnings? Because the earnings are what is going to drive the markets, nothing else. So my sense is, if we have, say, 25% deal in next 10, 15 days or month or whatever, I think market has already calibrated that particular kind of thing. And the whole world is paying. It's not that we are only paying 25%, nobody else is paying. Even Pakistan, they have put 19, 20%. So I would think that it will be a new world. New world decided by the way America wants to treat the world, but world will find its own way.
Ramdev sir, your point on big measures from the government, right? And we've seen that. We've seen announcements, right, from income tax in the budget, and now GST cuts will be a reality, maybe around the Navratri season itself. But you see the market's reaction to these big changes as well. The GST cheer lasted for all of 1 week. And I mean, again, then the overall sentiment is so negative. Is there anything else that you would want from the government that can really spur the market sentiment back?
But there are so many things, so we can keep talking about it, in the sense that This is I mean, like I am in Kenya here. I mean, when I see the possibility of tourism, I mean, we can do hundreds of billions of dollars of tourism out of India. But is there a focus on that? So we can go on sector by sector and see the possibility of non-financial, reforms, which are required to unleash this economy to its true potential. Education. I mean, the Indians are going all over the world to get medical degree or MBA degree. So can we? I mean, that might become $50-100 billion kind of services exports or import opportunity. In fact, we should be the university of the world, which is very easily doable.
No, absolutely, sir. And the government absolutely take your point. And the government has been talking about some of these sectors. So non-financial changes that can be, brought in. Finally, just coming back to the earlier question that I had on flows, because still now in this slightly dark patch, domestic flows have held the market together. Mutual funds tell us that they're still very optimistic on steady flows, steady SIPs. What about the non-institutional local flows? What's your sense there?
See, the bigger the pile of money, more cautious they are. So the HNIs, they will all be sitting on the fence till the market goes in new high. And when it goes on new high, they're the guys who will take to absolutely new high. So this is the nature of the things. All the institutions, since they are managed by the, risk averse people, they will take their own time. Instead of cashing on this kind of a soft patch, they will come when the sky is blue and everything is clean. And hence, once there is no uncertainty, they will come in and make new high. So there is enough money sitting. You must have seen DI buying, say 4-5 years back was about 1.5 lakh, 2 lakh crores. Last year was 5.5 lakh crores. And in this first half itself, in last 5 months, I think we have already done about 3 lakh, 3.5 lakh. So I think we are headed for 7 lakh crore kind of buying in the current year just by DI. On top of it, what HNIs do, that it could be a matching number. So we have plenty of buying this thing. The only thing is our earnings should held. And earnings are not dependent only on US trade deal. Of course, there'll be some at the margin, somewhere $5-10. But I think the much bigger gusher of earnings are going to come from reforms. I mean, even the GST reforms, if it is done in right spirit, the way it is being done, say 28 to 18 and 12 to 5, or I mean, if it is done in a clean fashion, I think it is that itself is unleash a lot of earnings growth.
And in that program that we did, you made it clear, right? Time for tinkering is over. Has to be clear, directed, and make it low rate, simple, no real complications. And I think that will lead to many years of tax buoyancy, even if there is a one-time kind of a hit. In the immediate term, Ramdevji, is there a need to support some of these sectors through various measures?
Let the deal happen.
Yeah,
I think we should wait for the deal to happen and then decide what we want to do, because the power of domestic consumption is very big. Now India is no more a $500 billion economy. It's a $4 trillion economy with 60-62% domestic consumption. I think we can unleash it. And that's what I think PM and the government is talking about. And this is a great time, the back on the wall, and we can definitely do it. So I hope this, whatever little bit setback is there in the tariff issue, I think we should use it to not only get a good deal on tariff side, but also unleash the domestic side.
Take that point, Mr. Agarwal. Thank you so much once again for joining us from the middle of your break. Hope you enjoy the rest of your holiday, and by the time you come back, the markets will be in a lot better shape. And hopefully, we have the trade deal that you believe is imminent as well. And thereafter, there could be everything else that we need to watch out for. If the trade deal does not happen up until the next 2 months, he believes that there could still not be any hit on the earnings. 7 lakh crore is the DII money that he believes will come in this year. And no worries as far as consumption is concerned, because if the trigger of reforms are unleashed on consumption, then perhaps that could keep the buoyancy intact for our markets. With that, what we'll do is take a short break with the news that the Nifty is holding with cuts of around 150 points. Our special segment, It's the Economy. Lata joins in with Jahangir Aziz of JP Morgan to assess the impact of the 50% US tariffs on India.